It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital, and sitting here next to me, the captain of the ship, the mayor of Beckerville, the governor of Texas, the smartest guy in the room, Mr. Michael Becker.
Hey, Paul. How's it going?
I'm doing well.
Got a lot of titles now. It's good.
I'm just reviewing all the awards and accolades that you've
Principal of SPI, Governor of Texas, Mayor of Beckerville. There's a lot of them.
Well, when you guys have purchased over 7,200 units, you start to and think of one or two people per unit. You start to think about a mass scale of folks that pay their checks to you.
It was funny. I was just actually talking to my accountant yesterday about I have a company that's an S corp that I have to pay myself a salary out of. And I had to write myself a job description on it to then kind of justify the level of salaries. I don't want to pay myself too big of a salary because, anyways, I was having to write a job description the other day. So it made me think of all the things I do for this one little entity, which is like a secondary entity. So it's just kind of funny.
Did you put in Mayor of Beckerville?
I did not, no.
So Michael and his company has purchased over $1 billion in assets, currently are under management with $650 million. Yeah. You guys have raised $200 million in equity?
Over.
And how many individual investors have invested with you guys?
We did 900K ones last year. I'll do about 12, at least 1,200 of this next upcoming year. And then I probably have somewhere between 600 to 700 unique investors have invested with us. So a lot.
That is a lot. No doubt about that. So he is the guy to trust with great information, great knowledge about what's going on in the industry itself, him and his group over at SPI. So we value his opinion. Question that come into the podcast for this week is, Mike, would love the podcast, but let's talk about a little bit about operations. What's going on these days with insurance?
Yeah, so like I said, I'm in the problem business because every day there's always a problem. You can't have over 5,000 units like we do without having daily problems that you got to manage. You can't have 600 investors without having daily problems that you got to manage. So one of the recent problems, last couple of years, some of the bigger problems, certainly the property taxes have been a problem because they keep going up and up and up. And every time you think the counties can't go higher, they prove me wrong. So we're kind of in the middle of all the tax protests right now. So that's certainly something that's been coming at us for a while. Here recently, you see all the low unemployment numbers. That's really been, a problem with labor. So labor's going up as well. So to get competent people had to prove going over budget on a property to keep a leasing agent in the middle of the summer because they were paying her $2 more than what we were paying her. And so I had to do that the other day. And then here recently, the painful thing we're going through is insurance renewals. So we've, largely dodged a bullet on that. But that bullet is hitting us right now. I think we're going to see, somewhere around 23 to 25% increase in our insurance premium year over year. And that is insane.
Can you raise rents by 20 to 25%?
Yeah, you're going to have to keep raising rents because that's, obviously that's not the largest line item. Either payroll or taxes are your largest line items, which are, as I mentioned, have been under pressure for many years already. Now insurance is going up, so that's been a problem, and it's not just an SPI problem. That's everyone's problem. It's across the board. Talking to all my buddies, everyone's getting hit with insurance. And it's not just Texas, it's nationwide, but, it's acute in North Texas because we've had a lot of hailstorms over the last several years. I was lucky to dodge. 2018 was clean, and so far 2019 was clean. But in 2016 and 15, we had 6 or 7 hail claims and a couple fires. So, we certainly have had our fair share of problems. So, you're having either increased deductibles to take a hell of a lot more risk to save some premium, and your premium's still going to go up, or you're having to take a little lower risk and pay even higher premium. So just, that's the problem, right? So when you're putting these deals together, make sure you're getting loss runs from the seller. So, you need 5 years worth of loss run. So the last 5 years worth of losses on that property, and you need to get a good quality commercial insurance broker on your side. Don't go to your local State Farm rep because that's not what they do. You need to get a good competent one, and you need to go shop the market. So you need to get that quote and you incorporate that quote in your underwriting, because if you're just using $200 a door, that's kind of like a plug, or $300 a door or whatever it is, you could be wildly off. So you need to make sure it's property and specific, that you get good quality quote. You need the loss runs to do it, because that is a problem.
Yeah, I would say that's one thing that you may see in the offering memorandums, that they just put a plug-in number on a per unit basis of what insurance is going to be, whether that's $200 or $250 or so. But sometimes if the seller never disclosed to the listing agent, well, we had a fire last year and we had a hail claim the year before, and all of a sudden that all those things add up to be $100,000, $200,000. and it's not $200 a door, $250 a door. It could be $700 a door. So ask for those 5-year loss runs that you can share those with your insurance broker, so they can build you, when you get a little bit more serious about this deal, they can give you kind of an idea of what that's really going to cost.
And the construction cost is up too. So that's having a compound effect on insurance. You don't think about that, but materials and labor are more. So if you have a claim, the cost to restore your property is up on top of it. So
how concerned are you guys with tariffs?
That's, shoot, that was one of the problems I caught myself, probably 3 or 4 years ago, was a couple years in the business, and I was living in the past with costs of materials. So when we first started, you could get a whole appliance package set for $1,000, and I was underwriting $1,000, and all of a sudden I was coming up a couple units short here and there on being able to get, through running out of money, and I just haven't hit all of my budget. And it's because, appliances went from $1,000 to $1,100, and now to get a set of stainless steel appliances is about $1,600, in bulk, with us shopping it super hard, right? So it could also be $1,800 if you don't shop hard. So, I think a couple things hit there. One, the tariffs certainly aren't going to help. So hopefully there's as we record it, that's active issue. So hopefully it's resolved by the time we listen to that with the China tariffs, because that's not going to certainly help, because that's just a tax on us. And then, the other thing, I think Sears went out of business. So the retailer going under business, it wasn't just Sears. Sears Commercial was one of the major appliance suppliers in the industry, and they went out of business. So I think all the other people have less competition, so they're jacking up their prices as well. That was one of the feedback I got a couple months ago. So, there's a lot of headwinds. There's a lot of tailwinds in this business. We got great demographics. We got a lot of people moving to the Texas markets where I do business. We got, rental rates going up, but there's some headwinds as well, and it's on the expense side. So you need to, make sure that you're paying attention to it. On the labor, too, make sure you're consulting your management company and say, hey, I'm budgeting $1,100 a door. Can I do $1,100 a door? Is it $1,300 a door? What is it? Just don't plug a number. You need to make sure you do your best to back check these numbers. I mean, this isn't something you do when you kind of first underwriting it, but once you start getting some traction on a deal, these are the conversations we have with our management company.
In what period of time, let's kind of go back to the blocking and tackling, what period of time, get an OM, you start to do the write-up on the transaction to kind of figure out, do I like this deal or I don't like this deal? What period of time do you bring on your property management company?
I mean, once we kind of get in the deal, we have our plugs, we look at a lot of deals, so we're pretty current on what we think it's going to take to operate it, Paul. And then once we start getting traction and get some feedback, that's when we bring in the management company, bring in our tax consultant. We don't just say, it's 85%, because that's what we, do. Maybe we underwrite 85% when we're underwriting it, but once we start
what does that mean, 85%?
So kind of the typical plug is, you plug like the purchase price times 85% times the millage rate, or 90% times the millage rate, something like that. So it's a percentage of the purchase price. That's how we underwrite in Texas. And every state's a little different. So, it's going to vary by region, but just because that's what the kind of the rule of thumb is, doesn't mean what reality is going to be. So we bought a couple properties in Tyler and Smith County, super passive, and Tarrant County, we own a bunch of property, and they're super aggressive. And then Bexar County, where San Antonio is like takes Tarrant County, makes them look bad, because Bexar County is like the most aggressive. So, it's really property specific and location specific. So once we kind of get some traction on the deal, it's like, okay, well, I'm underwriting 85%, but I'm going to call Bobby McCulloch, my tax guy, and say, hey, okay, Bobby, here's this, where should I be underwriting? Where's this thing going to shake out at? And then I actually go through that level of detail to get his opinion, because he knows more in his left little pinky finger than I'm ever going to know about property taxes. So I just rely on him and his opinion. The same thing with my insurance broker, management company on payroll and R&M and other expenses like that as well. So that's when you have traction. We're looking like we have a real chance of winning the deal. That's when I start spending their time on it. I don't want to do that on every single deal, because I'll wear them out, and because we look at a lot of deals to get to the one that makes sense.
So that's a little bit of a pro tip. Start talking to your property management company down the road, talking to your tax consultant down the road. You don't want to wear them out on every deal that you possibly will see, because you're going to probably have to look at, well, how many deals are you guys looking at right now just to capture one?
We've gotten more efficient, but, it's north of 50.
Yeah. So, but if you're just starting out as an individual, you may be looking at 100, 110 transactions before you find the one that makes sense. Secondary, tertiary markets, what's your takeaway right now?
Good or bad? I mean, we own 400 units in Tyler, and Tyler's a rich little town. It's about 120,000 in Tyler and about 200,000 or a little bit over in the MSA. And it's a hub of East Texas, and it's got a lot of stuff going for it, but all secondary markets aren't created equal. So be careful there. I mean, I'm not trying to be the king of Tyler or anything, not to say we won't do more deals there, but I'm not trying to be the king of the secondary markets. I like the primary markets. I like the demographic growth. I like the higher incomes in the major metropolitan areas. I like the better suppliers, more suppliers, better vendors. It's just harder to operate in these smaller markets, and you don't get the back end pop that you do in the major primary markets. But what you should expect is better yield. So, the risk transference is maybe you buy it for $60,000 a door and 5 years later you sell it for $62,000 a door. But if you can yield 12% along the way or something, then you get your money out through the yield in a secondary market. And if you're buying a secondary market, there's not a lot of yield and you're going to go do big value play. Maybe that works, right? But you need to check your area median income because it's just different because people move in and out of Hurst, Texas or Arlington, Texas all the time. People don't move in and out of Killeen, Texas as much, right? So or maybe Killeen's a bad example. He's got a military base. But Abilene, Texas is, people live in Abilene, want to live in Abilene. They generally grew up in Abilene. You're not moving from New York City to Abilene by choice. Let's put it that way. And there's not a lot of incoming major employers to draw you there like there is in Dallas or Austin or, Phoenix or wherever, Atlanta. So just, pay attention and, I've seen people come take their Dallas brain thinking that they just drop $5,000 a unit and they can raise rents $100 in Dallas. I can go do that in Abilene, and that just doesn't work as well.
Not in Abilene, not in Oklahoma City, not in Tulsa, some of these
yeah. So
areas.
Waco maybe, but you're on the I-35 corridor between Austin and Dallas. But even then, it's not the same. There's just, look at the area median income. It's materially lower in Waco than it would be in a similar submarket in Dallas-Fort Worth, Austin, for example.
Yeah. People always want to ask you questions. So I always try to tell them to go on to the Old Capital podcast and give us a question. So we always wanted to encourage you to ask the question. We usually get about 4 or 5 that come in a week. We would love for you to, again, participate. If you do have a question that comes up for Michael, go on to the Old Capital podcast.com website and ask your question because we want to keep Michael busy with all your questions and get them answered correctly. Michael, tell us a little bit about SPI and what you guys do over there.
Yeah, really the primary focus for us is to find high quality deals, get them tied up, go raise capital, buy them, and execute our business plan and hopefully return capital to our investors. So if people want to find out more information about us, the easiest way is simply go to our company's website, which is www.spiadvisor.com. That's SPI like spy advisor.com. There's a contact us form. Fill that out. And I'm always happy to have a 10 to 15 minute telephone call with listeners off of the podcast and maybe potentially partner with us at some point in the future.
And you guys do advisory work. What the heck does that mean?
Sometimes if you have, we're trying to get our minimum up a little bit, but you have about $5 million or more in capital. I say like you're in 1031 exchange and you want to come to Texas and you don't know anybody or, don't have the resources to get a deal tied up. We'll joint venture sometimes with people that have, $5 million or more in equity. So we could buy a large enough deal that it makes sense for us to spend time on it.
So you guys have been very successful at that.
We have multiple successful stories, and we have a few guys we're working on right now. So we're a little busy at the moment trying to satisfy what we need to do for ourselves as well as try to help a couple people out get home on some exchanges. A lot of pressure when you take on a 1031 assignment because they got deadlines,
they got timing, right,
and they got consequences if you don't come home.
Absolutely. So again, smartest guy in the room, Mr. Michael Becker. I'm Paul Peebles. Have a great day.